Creating a stock market basics for beginners. Here's the video that clear and make you easy to understand. It is a great way to help newcomers get into investing. Here's an outline you can follow for your stock market, with tips to break things down in a simple and easy to understand. 1. Introduction. What is the stock market? 1. Simple explanation. The stock market is like a big marketplace where people buy and sell shares of companies. 1. When you buy a stock, you own a small part of that company. 2. Relatable example. Think of buying a stock like owning a slice of pizza. 2. You're part of the whole pizza, but you only own one slice. 2. What are stocks? 1. Definition. Stocks represent ownership in a company. 1. If you own a stock, you own a tiny piece of that company, and you may benefit if the company grows and does well. 2. Relatable example. If a company is like a pizza restaurant, owning stock is like owning a small share of the business. 2. As the restaurant grows and makes more money, your share gets more valuable. 3. Why do companies issue stocks? 1. Explanation. Companies issue stocks to raise money for expansion, research, or paying off debt. 2. Relatable example. Imagine a small business wants to open more locations but doesn't have enough money. 2. They decide to sell shares of the business to raise the funds they need. 4. How do you make money from stocks? 1. Capital gains, price increase. You buy a stock at one price and sell it at a higher price. 2. Dividends. Some companies pay dividends, which are a portion of their profits given to shareholders, often paid quarterly. 3. Relatable example. Think of it like buying a concert ticket. 3. If the ticket price goes up, capital gains, you can sell it for a profit. 3. Also, some concerts give away free snacks, dividends, to ticket holders. 5. How do you buy and sell stocks? 1. Stock exchanges. Stocks are bought and sold on exchanges, such as the New York Stock Exchange, NYSE, or NASDAQ. 2. Brokers. To buy stocks, you need a broker, online or traditional, to execute trades for you. 3. Relatable example. The stock exchange is like a big auction where buyers and sellers come together. 3. A broker is like your personal assistant who helps you buy and sell tickets, stocks, at the right time. 6. The risk involved in stocks. 1. Stock prices fluctuate. Stock prices go up and down based on the company's performance, market conditions, and investor sentiment. 2. Relatable example. Think of the stock market like a roller coaster. 2. Sometimes it goes up, sometimes it goes down, and it can be a bit scary. 2. But if you're calm and patient, you can enjoy the ride. 7. The concept of a stock portfolio. 1. Diversification. It's important to spread your investments across different companies and industries to reduce risk. 1. A portfolio is like a basket of stocks. 2. Relatable example. Don't put all your eggs in one basket. 2. If one company's stock drops, your other investments may balance it out. 8. Understanding risk and reward. 1. Higher risk equals higher potential return. Generally, riskier stocks can offer higher returns, but they can also lead to losses. 2. Relatable example. Buying stocks in a new startup may feel exciting because it could skyrocket, but if it fails, you could lose your money. 2. Established companies are safer but may not grow as fast. 9. The importance of long-term investing. 1. Patience pays off. The stock market can be volatile in the short term, but over time, it tends to go up, which is why investing for the long term is often recommended. 2. Relatable example. Think of growing a tree. 2. In the short term, it might not seem like much, but over many years, it grows into something much bigger and stronger. 10. Where to start? How to begin investing. 1. Step by step. Open a brokerage account, e.g., Robinhood, E*TRADE, Fidelity. Start small and research before buying. Choose stocks from industries you're familiar with or interested in. 2. Tip. Start with an index fund or exchange-traded fund, ETF, which spreads your investment across multiple companies to reduce risk. 11. Recap and encouragement. 1. Quick summary. The stock market is a way to invest in companies and make money through price increases and dividends. 1. Start small, be patient, and think long-term. 2. Encouragement. Don't be intimidated. 2. With a little bit of research and patience, anyone can start investing and begin building wealth. Final tip. 1. Fun fact. The stock market has been around for centuries, and people have been investing and growing their wealth since the 1600s. If you found this helpful, don't forget to hit that subscribe button. Let's grow together and master the stock market.